What are the tax implications of multi-generational wealth for Asian Americans? In today's fast-paced world, the topic of multi-generational wealth is gaining attention, especially among Asian American families. With the recent rise in real estate investments, many are asking, what are the tax implications of passing down wealth? Understanding these factors is essential for effective estate planning and wealth preservation. Multi-generational wealth transfer involves several tax considerations that can impact families. One key area is estate and gift taxes. The United States federal government imposes estate taxes on asset transfers at death above certain exemption thresholds. This can significantly affect large family estates. Gift taxes also apply to transfers made during a person's lifetime that exceed annual exclusion limits. Families with substantial real estate holdings must plan carefully to minimize these taxes. Another important aspect is the generation-skipping transfer tax. This tax applies when wealth is transferred to grandchildren or more distant descendants, bypassing the immediate next generation. Proper use of generation-skipping transfer exemptions can help families avoid double taxation across generations. Trusts and private foundations are commonly used by many Asian American families to manage their wealth. These legal structures can offer tax advantages by controlling how and when assets are distributed. This can potentially reduce estate taxes and protect assets from creditors or disputes. However, they must be structured carefully to comply with tax laws and transparency requirements. Capital gains tax is another consideration. When inheriting real estate, the property's basis is typically stepped up to its market value at the time of inheritance. This can reduce capital gains tax if the property is later sold. However, if the property generates rental income or is sold within the family, capital gains tax implications must be considered. Asian American families often have properties or assets in multiple states or countries. State-level estate or inheritance taxes can vary widely and add complexity to wealth transfer. Additionally, international tax treaties and reporting requirements may apply, especially for families with ties to Asia-Pacific regions. Recent tax reforms and evolving regulations requiring ongoing attention. For example, limitations on debt interest deductions can affect real estate investments and financing strategies. Families need to stay informed to ensure compliance and optimize tax outcomes. Asian American families managing multi-generational wealth in real estate face a range of tax issues, including estate, gift, and generation-skipping transfer taxes. Understanding these factors is essential for effective wealth preservation across generations. Seeking professional advice tailored to family goals and asset types is vital in navigating these tax considerations.